Hello. I bring you greetings from Scotland. It was grey and dreich when I left this morning, and I arrived in blue skies. I'm told it's always like this in Derry, though. So when I left, my wife, who is a Brummie, said to me, as she always says when I leave to go and talk at conferences, she said, now remember to speak slowly so they can understand you. And that's usually the case anywhere I go. This is as slow as I speak. But coming to Northern Ireland, I think I'm actually quite safe in terms of my pace of delivery. I will get faster during the course of the next 20 minutes. I am a consultant. Please try not to hold that against me because it gets worse. I used to work for a bank. I was the Director of Financial Inclusion at Bank of Scotland for a couple of years. And if it wasn't worse than that, I do a lot of work for money lenders. So consultant, used to work for a bank, did a lot of work for money lenders, social business money lenders nonetheless. In my defence, my background is I'm a community worker by trade. Anyone who knows Edinburgh will know the Craig Miller and Wester Hales housing estates in Edinburgh. I worked in both of those estates for about 13 years on a series of regeneration projects and the like. I've called this presentation shrill, headline-seeking nonsense because that's what George Osborne said in his speech a number of months ago about welfare reform and those who were opposed to it. That was the speech, if you remember, when he was in the warehouse at Morrison's and he dropped all his H's. So what we have here was what he was doing. Oh, I don't know who was his social advisor on that one, by the way. Just incidentally, from the last presentation earlier on, which I thought was really interesting, I thought, I'm doing loads wrong. You know, no Twitter, no Facebook, a Hotmail address, and an out-of-date website. So I need to work on my social media skills. I want to cover three things. I want to cover a bit about context, where we are and what's going on, something you'll be familiar with. I want to touch a little bit in the middle, which will be the Mad Men slide that you see, which is about knowing your customer and granulation. And then I'm going to give you some examples of some of the things that are happening in Scotland and in England and in Wales, that some of which you might be interested in. I'll be here for the evening, so anything that sparks with you today, please come and grab me later on. So, let's get a bit of context. Who are the people who are going to suffer the most? They are disproportionately asset poor and cash poor, your tenants, people living in social housing. 3 million people across the UK use home collected credit, borrowing on the doorstep, Friday nights usually, and Mondays at £82 per 100. 83% of those people rent their homes, pay three times out of 5, usually to Provident and those type of companies. There are proportionately more, as many renters as owners who apply for credit, but are 2 times more likely to be refused credit. Social renters' median income is lower than owners, about half as likely to be in full-time or part-time employment, 6 times more likely to have lone parents living in social housing. That's not to denigrate lone parents. My wife was a lone parent before she met me. My sister-in-law was a lone parent. But the lone parents tend to be living on very low incomes. And social renters, particularly younger social renters, tend more likely to be uninsured, despite the fact they're more likely to have fire, flood, or theft in their home. All of these blue banners, by the way, are all quotes from George Osborne on the same day in that same place at Morrison's. So I'll let those kind of speak for themselves. The impact on welfare reform, and I know you're kind of not quite as far down the road as Scotland, England and Wales on this. There's some things still to happen in the welfare reform bill still to go through in Northern Ireland, so there's things that haven't occurred here yet. But this piece of research done by Sheffield University for the Financial Times is quite stark in terms of who is going to suffer the most in terms of districts across the UK. About 33% of the top 20 or bottom 20, whichever way around you want to look at that, are in Northern Ireland, Derry being number 2 only behind Blackpool, in terms of the impact on working age individuals as a result of welfare reform. It's a fascinating piece of research. If you haven't seen it, it's worth seeing. It's on the Financial Times website, and it drills into all of the impacts from DLA to PIP to benefit cap to under-occupation charge. And Northern Ireland is featuring very heavily in terms of what the dangers of that are. But making changes to tax and benefit systems so the country can live within its means. So what was the reasoning of this? Let's think back to May of 2010, the budget of 2010 and the Comprehensive Spending Review. And no one really would disagree that something needed to be done around welfare reform. No one would disagree with that. It is complex. There are incredibly weak work incentives. I do a lot of focus groups with individuals who are either out of work or who use money lenders or who use high-cost credit of some other kind. And people talk about weak work incentives, you know, it's not worth it to go back. So there is an issue there. Welfare reform, there's nothing wrong with the idea of that, absolutely not. But I think there's two things going on. There's welfare reform on one hand and welfare cuts on the other. And I think the cuts are already having an impact. They've been having an impact since 2010. It was 2010 when child benefit was frozen. It was 2010 when the Child Trust Fund was stopped. It was 2010 when maternity pay for the second child was stopped. It was 2010 when the winter fuel payments were dropped. Were reduced, not dropped, reduced from 400 to 300. All of those things begin to kick in. Now, you could go back further than that and say that the Labour government before that were already doing things around that. And anyone who read the Daily Telegraph this week around the secret recording of Labour at their conference about what they intend to do around welfare would see something even more alarming almost in many ways about that recording where they're saying we have to actually be tougher. So there is kind of widespread political support on this. This report, there are 4 reports that I've read. I'm an anorak. I've got loads of zips on my anorak. I read loads of reports. There's 4 reports I've read in the last 2 years that are truly jaw-dropping. This is one of them, the National Audit Office report on universal credit. If you haven't read it, it's really worth a read. Get your highlighter pen out because you'll just go all the way through it with your highlighter pen because it's quite astonishing. I'll tell you the other 3 later on, by the way. So that report is in terms of is scathing in terms of what it says about how universal credit is proceeding. And it is hard. There is no doubt. It's a big job, and it's hard. Few would disagree with this. These 2 lads, I suspect you know these guys, Cameron. These 2 lads were part of the Centre for Social Justice initially, part of the architects of universal credit. Again, no one would disagree with that. Everyone is offended at the idea of someone who doesn't appear to be able to afford it going off to Sharm el-Sheikh for a week. Nobody can quite compute how that works for some people. So we're all offended by that, but it's such a tiny proportion of people who are at it that we have to kind of get a sense of perspective around that. But no one would disagree that work works for me. You know, the dignity of work is important, and it has to be rewarding. And people don't want a welfare system that keeps them in poverty. I don't think anyone in this room would disagree with that. So I think, as I say, I think there's a kind of welfare reform, push-pull thing, welfare reform, welfare cuts thing going on. Do you either think it's the Ian Duncan Smith side of the agenda, where it's about a springboard, about helping people out, about making a difference in people's lives, about getting work to pay, or is it more about the £24 billion of cuts that have been made to the welfare budget to 2015? That whole thing, where it's actually just working age welfare reform really is what we're talking about. We're not talking about my dad's TV licence. We're not talking about my dad's winter fuel payment yet. We've not got round to any of that kind of stuff yet. So we are replacing, as you know, all these benefits into one simple means-tested payment in arrears, monthly in arrears payment. That's the plan. So who's winning that debate? Well, you could argue that, you know, that kind of denigration of the poor, the strivers-skivers thing, dare we use the word pleb, that whole argument is being delivered by the media. I think it is being delivered. We don't talk about, I mean, we had the horrendous situation about a year ago in Derby where that terrible situation where the guy burnt his house down, killed 6 children. And that was somehow linked to people who were at it, somehow linked to people who were welfare scroungers. Look at what they do. We don't go to our doctors and worry about serial killers, even though Harold Shipman was the greatest serial killer in the UK. You know, but the link is all there. That kind of constant little nudging and pushing and denigration is going on that creates the story. I think everyone who's got more than 10 kids in the UK has been on the front page of the Daily Mail at some point in the last year, because I think there's only about 100 people who apparently have more than 10 kids. But George Osborne's right. Taxpayers don't think the welfare system works properly anymore, and people in this room will not think it works properly anymore. One of the other 4 documents I was talking about was the British Social Attitudes Survey of last year and this year. If you want to read what your fellow citizens think about welfare and immigration in Europe, and you want to get kept awake at night with that, read that report. So we have that kind of narrative, I think, that's going on, and it's got all party support. Labour support. These charts at the bottom are about, I think it's 9 out of 10 Tories, 3 out of 5 Labour voters, and 3 out of 4 Liberal voters believe that welfare is one of the best things that this government are doing. That speech, that George Osborne speech, that tracking that was talked about in the earlier session, the 52-week polling for that week for the government went to its high because of the talk about welfare. And apparently the talk is even better when you talk about benefit caps. That becomes an even higher kind of touch point with the public. And there's been this British Social Attitude Survey of last year and this year, a slight softening this year when the media have started to pick up on the stories about what might happen around under occupation, and people start to see folk who might be affected by this and think, well, they don't seem so bad. It seems perfectly reasonable to have an extra room for that guy down there. So that's softened a little bit, but it's still very high in terms of attitude. And again, George Osborne is probably right. Those who campaign against it are on the wrong side of how millions of working families believe, and that's the truth. So, I want to just briefly touch on the National Audit Office report. These are just two quotes from it, and I want to just touch on them briefly if I could. My two tin cans are obviously there to illustrate the computer system that we're going to get. I was doing this speech in the SFHA conference about 6 months ago, and I was kind of going, real-time database, what can go wrong there? You know, we've not been down that road before around computer systems that could go wrong. 300 million wasted so far. And this guy in the second row put his hand up at a Q&A session, and he said to me, you were talking there about that real-time database. My son-in-law is a senior analyst for IBM. They're building that database. Oh, what did I say? I said, all right, okay, that's interesting. Well, what does he say? He said, he says to me, it won't work. True story. It's absolutely true. But we're restoring common sense and controlling costs. 300 million so far and rising. Apparently at one point we're spending £500,000 a day being spent on IT consultants for this system at one point. So what do we know so far? Under occupation charge, proven very hard to collect. You're going to hear more about that. The demonstration projects, direct payment demonstration projects, arrears are right at about 7%, about double what they were for most landlords. KYC, know your customer, major issue. I am of the view, and I usually have to be close to the door when I say this, I am of the view that social landlords don't know very much about their tenants and haven't known very much about their tenants until the last 2 years. You know who they are when you give them the keys, usually, and that's about it. Now, that might not be the case for everybody, but that's generally been my sense of it. We know there's rising food and fuel costs. We know that all of these challenges are out there for people who are in work. Wages are frozen or are getting worse. There's not a person in this room who hasn't filled up their car and gone home and said to their partner, do you know how much I just paid to fill up the car? There's not a person in this room who isn't going to the shops and deciding whether it's going to be Tropicana or Tesco's Own or whatever. You know, we're all doing those things. But if we're doing those things and we're in employment and we are further up those income deciles, then how is it if you're in the bottom quintile when you find it really, really tough? Claimant commitment sanctions are on the rise. This is the new thing. Look out for this. Look out for sanctioning, because sanctioning will lead to further antisocial behaviour. Sanctioning will lead to thieving. That's what's going to happen. I come across a lot of people who talk about sanctions a lot. People have been sanctioned about their benefit just now. There is an absolute snail's pace of rollout. When you look at where we were meant to be and where we are, it is unbelievable. We are nowhere near close to what this was intended to be. And there was definitely a reset of the whole thing in between February and May. We know that originally the idea of digital by default, this idea that every single universal credit claimant was going to be online somewhere, filling in their form. Well, we know who's offline at home, and lo and behold, social housing tenants tend to be more likely to be offline at home, and they don't want to be online, certainly don't want to be online to fill in their universal credit form. That is not going to attract lots of people. So we've got all this absolute nonsense in Glasgow, plotting where every internet connection is in a library, as though people are going to be queuing up for hours on end to fill in forms. It's nonsensical. Northern Ireland is going to be very badly affected. That slide earlier on showed that. The idea of jam jar thinking has changed. This idea of putting money into pots and kind of budgeting for people monthly in arrears. I think some of these guys just sat in a room and said, you know what I do? I pay my direct debits by everyone. That's what everyone should do. I think that's what's happened. And I don't think there's no understanding of how people actually live their lives, week to week rather than month to month. I think the National Audit Office report is absolutely scathing, and I think we have absolutely got an IT fiasco. This social media thing about getting the message out, I think it's stunning in terms of how, to be fair, Ian Duncan-Smith fought a good fight in terms of rearguard action on this, I thought. But it's stunningly bad, the report, and we do have to plan for it. It's not going to go away, and it won't go away with a change of government. Bits of it might. So here's the Mad Men bit coming up. So I'm about halfway through, for those of you who are bobbing along. I think that the demonstration projects also showed us that, and Lord Freud is right, they also showed us that landlords don't know very much about their tenants. The plural of anecdote is data. You've got lots of data, you need to collect it well, you need to collect it right, and you need to use it smartly to understand your customer better and deliver better services for them. I think there's no doubt about that. There is a quote. For any of you who are fans of Don Draper and Mad Men, I like to get at least one Don Draper reference into every presentation. This one, I think, matters. People tell you who they are, but we ignore it because we want them to be who we want them to be. And I think that's absolutely true in the case of social housing tenants. We are trying to jam social housing tenants down the road of direct debits and bank accounts when many social housing tenants are telling us, I don't want to be jammed down the road of direct debits and bank accounts. You know, people are telling us different things, they behave differently. How do we know that? This slide here told us, before the demonstration projects, how people like to pay their bills. Direct debit was about 17%. Most of it is cash. Most people want to pay in cash, or different ways. Don't always want to pay in direct debit. People tell us who they are, and we ignore it. This is about data and about using data well. We know that the poverty premium is high. We know that social housing tenants, all the slides at the beginning, are getting the dirtiest end of the stick. We know they pay too much for food, they pay too much for fuel, they pay disproportionate amounts of their income on the things that they ought not to. They pay a disproportionate amount for cash. And their financial resilience is low. The three most common reasons for budgeting pressures are the same as probably for us all. Rising food, rising fuel, cost of bringing up kids. Now, we all know that. My kids left home and decided to come back. Why did they do that? They do it because your kids come back as well. My kids left, 20 and 22, both decided to come back. Why? Cheaper to live at home. So they're back out again, fortunately. So they're back out again. But they came back for a year. Pleasure to know. Pleasure to have them. Charmers. Absolutely. But we know that cost pressures lead to household sacrificing one thing for another. And I did a focus group last week with 12 well-paid housing association staff in England, ranging in incomes up to over 60,000 to about 15,000. 10 of the 12 of those people, with half of them on above average incomes, half of them on just about the 30-40% income deciles, 10 of 12 told me they were short before the end of the month. And they were using savings, unauthorised overdrafts, authorised overdrafts and credit cards, and in some cases short-term loans to make ends meet. And they were at a different end of the scale. They were seeing cost pressures. They were seeing the Tropicana Tesco thing. They were seeing the petrol thing. Do you know that ASDA tracked this? ASDA used to say that one person in every 5 went into petrol stations and paid by a round pound amount, £10, £20, £30. And now it's 3 people out of 5 that do that. Get a rise in pressures. 3/4 of people in the lowest income deciles have no savings. And they are, contrary to what the government say, 42% of those in the bottom quintiles are not paid monthly, they're paid weekly. I think there's 2 other things. I think frequent payments ration incomes, weekly or fortnightly. It's bad enough that you go 1 day without, but if we go to monthly in arrears, it's going to be, 3 days without, 4 days without? The rise in food banks would kind of indicate there's some truth in that, although Lord Freud says there's no connection between the rise in food banks and the rise in welfare decisions. And I think I think this is an important one, hypothecated spending decisions will suffer. If you call something winter fuel payment, apparently 42% of people spend it on winter fuel. If you call something you didn't have a name, that's only 3% would use it on winter fuel. So call it what it is, child benefit gets spent on the child. So you call it universal credit, what is it going to get spent on? It's going to get spent on lots of things, and there's lots of distractions for people managing money. So what are social landlords doing? I'm only able, in the time I have, to pick out a few of these. But like I say, I'll be around for the day. But I want to pick out 1 or 2 of these. These are things that are happening in Scotland, Wales, and in England. One of them is something we're interested in doing also in Northern Ireland. The rental exchange. This is a piece of work that's been done by Big Issue Invest and Experian, the credit referencing agency. And basically, they are of the view that if you took predictive rent data into account, that tenants' credit scores would improve. They've tested this on 50,000 pieces of data. They are now talking to housing associations in England and Scotland. They are interested in talking to housing associations in Northern Ireland. So if you are interested, come and talk to me later on. But they have already found out from testing this that there will be a 30% rise in people moving above the line on Experian's credit score between prime and subprime. The line is 750 points, incidentally. So they'd see a 30% rise in that, and they'd see a 40% rise in digital authentication. That means being able to prove who you are and where you live. So that's one thing that's going on. Grand Central Savings, this is a project that operates with about 3,000 people in Glasgow and Greenock with housing associations. Its back office is effectively a Bank of Scotland account. It opens accounts, bank accounts for people with chaotic lives and provides them with a very intensive level of support to pay bills. It's been run through East Hall Park now in Glasgow and a whole host of other places. It runs like a bank. It is a bank account. It's perfectly able to receive universal credit payments. It operates on what's called a credit trigger, so that, which is important, we'll all have direct debits on our account, and they'll operate on a date trigger, 5th of the month, 28th of the month, 3rd of the month. Credit trigger operates when universal credit gets paid in. That's the trigger for paying something out. In the case of this, it would be rent, regardless of what day that rent was due, be held in an escrow account. So credit triggers are important because customers don't like, particularly low-income customers, don't like direct debits. They don't like them because ask the bank for a bit of leeway, personal service. It's either short or it's either in or it's not in, isn't it? It's not nearly in. It's either it's penny short or short. So people like flexibility, and credit trigger allows some of that. This is a project in Stanley in County Durham, run by Derwentside Homes. It's called The Store. It's an alternative to rent-to-own stores like Bright House. It's run through Community Bank, Credit Union, a social business called Shed, and they provide, they ape the stuff that they know that social housing tenants use when they go to rent-to-own, no credit check stores. Effectively big TVs and powder blue oyster-back settees. Frankly, that's the two big sellers. They sell the same things much cheaper. That's kind of comparison price, $542 versus $1287. $1287 is the price at Bright House for that same television, sold at store at $542. The bracket figure, 2276, that's the price when Bright House sell you an insurance product, because 9 out of 10 people don't have home contents insurance who go into the store at Bright House and they get asked to take an insurance product. So they operate, they've sold about 250,000, 300,000 pounds of goods in their first year to social housing tenants across County Durham, working quite effectively as a social business because it mirrors what people like. People tell us who they are. Credit union, jam jar, and budgeting accounts operating in some parts of Scotland, some parts of England. Credit union movement is very strong in Northern Ireland in many places. Not so strong with social housing tenants. Strong across the board, but not so strong with social housing tenants, as it is in the rest of the UK. If you take Glasgow Credit Union, for example, about as big as Derry Credit Union here, £90 million loan book at Glasgow Credit Union, about half of that mortgages, about the other half of that average loan £2,500. That's not someone wanting a fridge or a repair to a Peugeot 205 Pistons or something. That's different. So there are some credit unions that are willing and able, some credit unions that are willing and unable, and some credit unions that are able but not willing to offer support in this area. And you have to kind of work with those that are both willing and able. And some of those, like Pollock Credit Union in Glasgow, who work on this jam jar account, credit triggered with a number of social landlords. This is an interesting one. This is also in Glasgow. This is Scott Cash. They offer credit, but they offer credit that is cheaper but not cheap. You'll pay about £25 a hundred for it. It's not cheap, but that covers costs. It's social business. They also offer bank accounts, saving accounts, and money and debt advice. They work with a very particular customer, bottom quintile, young women with children, social housing tenants. That's their customer all the time. 97% of loans under £1,000, most loans under £500, small sum credit. They open bank accounts in that store. They open, you don't have to go to a bank to open an actual bank account, it's RBS. They open credit union accounts. They've made 8,000 loans for about 4.3 million since they've been open. And they have just recently, in the last 2 years, opened there, over there at number 4. You can see Scott Cash. This is NG Homes in Glasgow, based in Springburn. Springburn, for those of you who know Glasgow, will know that Springburn has the highest rate of child poverty in the UK. I think maybe a part of Tower Hamlets. But Springburn's child poverty rates are enormously high. They opened a branch of Scott Cash in their front office in 2011. Credit, bank accounts, saving accounts, money advice, separate from NG Homes, but that's the NG Homes reception. That's the reception there, and that's the Scott Cash office in the background. They've done about £400,000 worth of lending in the 2 years they've been open. They've helped about 800-900 tenants with loans. They've also helped about the same number of tenants with money advice and debt advice. People come in seeking a loan as a solution, but a loan isn't the solution. Debt advice is the solution for many people. So that's where they're based, right in the heart of the Springburn community. G21, G22 postcodes, the poorest in Glasgow. And of course, if they're the poorest in Glasgow, poorest in Scotland. And these are quotes from the customers themselves who have used the service. This is another one. This is the last one. This is Moneyline in down in England. They're even bigger. They work with housing associations in England and Wales. They've been going for 10 years. They've advanced over £32 million. The same thing. Lots of small sum credit, but small sum credit at a price to a granulated customer. A customer who is a young woman with children living in social rented housing. That is only their customer. That is all their customer. Almost always. About 2 out of 3 benefit dependent. They work solely with that customer, offering debt advice, bank accounts, money advice, and savings. They've had about, last year they did £1 million of savings with that customer who the Social Market Foundation tell her can't save money. This customer, bottom 10%, bottom 20% of incomes, have saved money with Moneyline. They've taken it all out again, take it all out at Christmas, but they saved £1 million and took £950,000 out at Christmas. So, what do we know in summary? Tenants' resilience is going to be tested, and it's been tested since before 2010. Widespread support, recent softening of that. Northern Ireland's going to suffer hard. Banking and digital, hard sell for everybody. Granulation, got to get smarter with the data. This will be a political wedge issue in 2015, of that there is absolutely no doubt. But there will be delays and deviations from the original plan. Thank you very much for listening. That's a shameless plug for me.